All right, so are you ready to dive into these VIP Industries reports with me? I'm really curious to see what these numbers tell us, especially with these suitcases and bags they're famous for.
Yeah, it's always interesting to sort of, peel back the layers and see what's really going on.
Exactly, and we have you here to guide us through it. So we've got VIP Industries unaudited results for the quarter and half year ending September 30, 2024, and there's a lot here. We've got standalone figures, which is their core business in India, and then consolidated figures bringing in their global subsidiaries. It's like the full picture. So where should we even begin?
Hmm. Well, we could start by taking a look at their standalone figures for the half year ended September 30, 2024. VIP Industries reported a profit of 38.5 million rupees. Not bad, but here's where it gets kind of interesting. For the quarter ending on that same date, they actually experienced a loss of 34.05 million rupees.
Wow, a swing from profit to loss within the same half year. That's a wild ride. What happened there?
What? Well, this is where those exceptional items we see on balance sheets can really be telling.
Oh, you mean like that fire they had at one of their warehouses back in 2019?
Exactly. That insurance claim finally reached a full and final settlement this past half year. 25.78 million rupees listed as income.
So that payout is kind of masking a potential loss for the recent quarter.
You got it. It's important to remember that these exceptional items, while important, aren't part of the company's regular operations. They can really paint a different picture than what's actually going on.
Okay, exceptional items noted. So let's talk about their main gig, selling luggage. They pulled in over 1 billion rupees in revenue from operations for the half year. They are selling a lot of suitcases. But I also noticed their cost of materials consumed has gone up significantly. It's almost doubled from the same period last year. What's going on there?
That's a great observation. And the points to a trend we're seeing across a lot of industries right now. Rising raw material prices. For VIP Industries, this means their cost of materials for the half year ended September 30, 2024 was about 247 million rupees compared to about 124 million rupees for the same period last year. That's a huge increase in expenses.
Wow, that is huge. What kind of impact does that have on a company like VIP?
Well, it directly impacts their bottom line. If the cost to produce each suitcase goes up, but they don't increase their selling price, their profit margin shrinks. They're making less money on each suitcase they sell.
It's a tough spot to be in. Speaking of tough spots, I noticed that VIP Industries granted stock appreciation rights to their employees, which seems like a smart move to keep their team motivated and attract new talent.
Definitely. Stock appreciation rights can be a very effective tool. It's a way to give employees the potential for increased earnings tied to the company's stock price.
Right. But these stock options also come with a price tag for the company, right?
They do. Looking at their employee benefits expenses, we see an increase for the current half year ending September 30th. The cost went up to about 80 million rupees from about 40.5 million rupees for the same period last year. Now, this could be due to a few factors, but those stock appreciation rights are definitely playing a role.
So while those stock options are great for employee incentives, companies need to keep in mind those associated costs.
Exactly.
All right, so speaking of balancing acts, let's look at their cash flow statement. This is where we see how the money's moving in and out of the company.
Right.
And I noticed their cash flow situation looks a bit like a seesaw. Up in some areas, down in others. For example, their cash flow from operations is really different between the standalone and consolidated figures. Standalone, they have a net inflow of over 103 million rupees. But on a consolidated basis, it shrinks to just over 9 million. Why is such a big difference?
This is why it's so important to look at both standalone and consolidated statements. The consolidated statements include the financial performance of VIP Industries and all of its subsidiaries. It seems like something is going on with those subsidiaries that's really impacting their cash flow.
Okay, interesting. Well, let's stick with the consolidated cash flow statement for now. Their cash flow from investing activities shows a net outflow of over 36 million rupees. So they spent more than they've made in this area. What's driving that?
A big chunk of that outflow, almost 59 million rupees, actually went towards property, plant, and equipment. This tells us that they're investing in expanding their operations, which, could be a good sign for their future growth.
Makes sense. Investing in their infrastructure can set them up for success later on. But hold on, if they're spending money on expansion, shouldn't they be generating more cash flow? Not less.
Well, that's where things get interesting.
Hmm.
And to really understand what's going on, we need to dig a little deeper into their financial strategy. But that's the story for part 2 of our deep dive.
Oh, you're going to leave us hanging.
Got to keep you coming back for more.
All right, listeners, grab a snack, catch your breath, because we are just getting started. We'll be back soon with part two of this deep dive into the world of VIP industries. All right, so we're back with part two of our VIP industries deep dive. Where we left off, you were about to tell us how they're financing all of this expansion.
Right. So they've got a net inflow of over 30 million rupees from financing activities. A big chunk of that, about 76.67 million rupees, actually comes from borrowings.
Okay, so they're taking out loans to help fund this expansion. Makes sense, but it's also a little risky, right?
Yeah, for sure. Taking on debt is a common way for companies to finance growth, especially if they think those investments will lead to strong returns down the line. But like you said, it does increase their financial leverage and could make them more vulnerable to things like changes in interest rates.
It's a gamble for sure. What else are we seeing on their consolidated cash flow statement?
Well, remember those right-of-use assets on their balance sheet, the ones related to their lease agreements.
Oh, right, yeah. Like renting a piece of equipment instead of buying it outright.
Exactly. They've spent a significant amount, about 126.79 million rupees in payments for those rights. And even though it's not a direct purchase, they're still financing the use of those assets over time.
Yeah. Interesting. It's like how different accounting methods can kind of change how a company's finances appear. Anything else catching your eye?
Well, let's switch gears for a second from the cash flow statement and look at their income statement. One thing that jumps out is their other income for the half year ended September 30, 2024. They earned about 5.22 million rupees, which is actually a bit lower than the same period last year.
So this is income from things besides their main business of selling luggage, right? What kind of stuff falls under that?
Exactly. Things like interest earned on their cash, gains from investments, that sort of thing.
Okay. So not a huge part of their revenue, but still contributes to their bottom line. Every little bit helps.
Exactly. Now let's talk about something that has a direct impact on those profits. Finance costs. This is basically the cost of borrowing money.
Ah, right. The interest on those loans we were talking about. Makes sense.
Their finance costs for this recent half year were about 36 million rupees, almost double what they paid in the same period last year.
Wow, that's a big jump. Shows how taking on more debt can lead to higher interest payments.
For sure. Now, before we move on to their consolidated figures, let's quickly touch on their standalone earnings per share, or EPS.
Right, because those consolidated figures include all complexities of their subsidiaries. So what's the story with their standalone EPS?
Well, for the half year ended September 30, 2024, their standalone basic EPS was 3.07 rupees. But here's the thing. For the same period last year, they actually had a loss per share, 2.40 rupees.
So for every share an investor holds, VIP Industries earned 3.07 rupees during this period. That's a pretty big improvement. It seems like they're becoming more profitable, at least when you just look at their operations in India.
Right. But that's just one piece of the puzzle. To really get the full picture, we need to look at their consolidated figures, which include how their subsidiaries are doing.
Yeah.
And that's where things might get really interesting.
All right, we're back for the final part of our VIP Industries journey. We've seen how they're doing in India, but now it's time to bring in the global picture with their consolidated figures.
Right, and those consolidated figures include all their subsidiaries. Remember how those numbers looked a bit curious earlier? Especially the cash flow.
Yeah, definitely. Like their consolidated cash flow from operations was way lower than their standalone figures. What's the deal there?
So you're not going to believe this, but remember that fire we talked about at their warehouse in
Oh,
India?
yeah. The one with the big insurance payout.
Well, it seems like, well, they had a bit of a repeat experience, this time with their subsidiary in Bangladesh.
Wait, are you serious? Another fire? What happened?
Yeah, so back in January of 2023, there was a major fire at their subsidiary, VIP Industries Bangladesh Private Limited. And they've been dealing with the insurance claims and all that ever since.
Wow, two fires. You think they'd invest in some fireproof luggage after the first one?
Right. But this is where things get kind of interesting from a financial reporting perspective. Remember those exceptional items we were talking about?
Of course, those can really shake things up.
Well, the consolidated statement shows an exceptional item for both the quarter and half year ended September 30, 2024, related to that fire in Bangladesh, a partial insurance payout they received.
So that's why their consolidated cash flow from operations for the recent quarter is so much lower than their standalone figures. Those fires are still impacting them.
Yep. Just goes to show how those consolidated statements can uncover things that aren't always obvious in the standalone figures. Important to look at the whole picture.
Absolutely. So besides the fires, what else is going on with their consolidated performance?
Well, their revenue from operations for the half year is over 1.18 billion rupees, which sounds pretty good, but it's actually down a bit from last year.
Should we be worried? It's still a lot of revenue.
Well, it's something to watch, especially with those rising material costs we talked about earlier. It's possible those increased expenses are starting to eat into their profits.
Makes sense. They might need to think about raising prices, maybe,
Yeah.
or streamlining their operations somehow.
Exactly. And, investors often look at consolidated earnings per share, or EPS. And for the half year ended September 30, 2024, it's 5.02 rupees.
Hmm.
But here's the kicker. During the same time last year, they actually had a loss per share, 2.04 rupees.
So for every share an investor holds, VIP Industries earned 5.02 rupees this time around. That's a big turnaround.
Right. They've had those fires, the rising costs, but it seems like they're figuring it out and making it work.
It sounds like VIP Industries has had quite a year.
Definitely. It just goes to show how those financial statements can tell a story. We've seen how they've handled those unexpected events, how they're investing in their future, and how they're managing all of it.
It's been quite a deep dive. We've learned a lot about VIP Industries, their recent performance, and the challenges they're facing. But here's something for you to think about. What strategic moves do you think they should prioritize in the coming months? That's something to mull over, and we'll catch you on the next deep dive.